Right, so this is the SPX Credit Spreads and Futures Workshop, and it is being recorded. So if you miss something, you should get a email either today or tomorrow with the replay. And I actually think that we send out the presentation too, just so you have that to keep. But I'd advise you to take a lot of notes. I'm going to be covering a lot of information today, which is going to be very valuable to you, as it was to me as I learned it over the years. Okay, so this presentation is for 1 hour. It really does last the whole time, and hopefully you can stay for the whole time with us. Okay. All right. So towards the end of the session, I'll be talking about how to break the barriers that lead to trading consistently profitable, okay, along with the specific trading information that I'm going to be sharing with you as well, right? Okay, so let's get right into it. Hopefully you all can hear me well, and you know, there won't be any audio problems. Okay, here we go. All right, so what can you expect from our session today? I'm going to be showing you how you can make consistent returns monthly based on margin capital at risk by using high probability trades, and that's really important. And without taking large losses, and keep those returns month over month, right? That's the overarching goal of this presentation. And I see we have pretty much an international crowd here today, which is great. Okay. What will you learn? You'll be able to select the right option, credit spreads, before the market opens. Okay, and I'll share with you the specifics of those credit spreads and how I select them on a daily basis. All right, how to enter and exit your trade, so trade management. How to prevent large losses, which is very, very important, especially with credit spreads, because they are subject to very large losses. Okay. And so we have to be careful about that, and have a general understanding of when not to trade and how to trade consistently profitable. Okay, so I want you to stay with me until the end. There's a special bonus that I'm going to share with you that you don't want to miss, and I'll give you those details towards the end of the workshop. All right. Also, it's very important that you really shut out distractions. As I mentioned before, we're going to be covering a lot of information in a short period of time. So you want to be able to clear all your distractions and take notes. And then there's going to be a Q&A session at the very end of the presentation. And I'm pretty sure I'll be able to cover every single one of your questions that you have by the end of the session. Okay, that's my goal, right? But try to hold your questions, take notes. You know, try to hold your sessions questions to the end so that the presentation's not interrupted. Okay. All right. So let's talk about the reason that you're here. Okay. And this is the first one. I'm guessing at 3 of them, right, that you have. So number 1 is that you're interested in learning new strategies that'll take your trading performance to the next level, so you can finally leave that 9-to-5 career behind. Okay, that's reason number 1. Number 2, you've seen, heard about, read about others making money trading, and you know you can do it too, but you're just not seeing your account grow fast enough based on your goals, or you're not seeing your account grow at all, right? That's I've been in that camp, and I was in that camp for many years, right? You've tried different trading strategies that you thought, okay, this is it, only to discover it's just not getting you to the place of consistent trading results, right? So, so here are the 3, just to make sure that, you're awake and alive out there. Which one of these do you fit into? Or is it 1, 2, or 3, or is it all 3? Just let me know real quick in the chat here so I can see that you're alive and responsive and listening to everything that I say. All right. 3, number 1. Great. Thanks. 1 and 1. Okay. Awesome. Great. 2, 3. Yep. All over the map. All right. All 3. Yep. I was in that camp. All right. Great. Thanks, guys. That's a lot of people. All right. Awesome. All right, I'm not a multimillionaire. I'm just a regular guy that loves to trade. Here's my family. My wife on the left. We do live in Puerto Rico, which I'll be going in a couple weeks here, finally, permanently. There's 4 of 5 of my kids in the middle, and my parents to the right. My and that was an event that it was an MBA event that I went to years ago. All right, so regular guy, regular trader, just love to trade and doing what I love, so living the dream. Okay, and I want to make sure that I share everything I possibly can to get you to that place as well. All right, so let's imagine something. All right, and trading is really a lot that has to do with a state of mind. Very important. Okay. And we'll try, I'll talk a little bit about psychology, but imagine first what it would feel like if most of your trades were winners month after month, and it would be confirmed by watching your account size grow at the same time, right? Just imagine that, and picture that, because that's really the goal here, right? Becoming the trader that no longer takes large losses, but consistently trades according to a proven trade plan, very important, that is profitable over time, allowing you to grow your account month over month, right? And I'm going to reinforce that all the time, because that's what you want to have in your head. Your goal should not be to make these huge wins, right? But make wins consistently. And that's really what every trader should be striving to make. Okay? So first of all, let's talk about the core of what we're presenting here today, right? And that's SPX credit spreads. So what are they? A credit spread has a combination of 2 puts or 2 calls, okay? And we're starting at a little bit higher level. I'm not going to go into the fundamentals of options here. We just don't have time. But hopefully you have that grasp already with you. If not, do some research, because there's a lot of very good training out there about options. It's a combination of 2 calls, 2 puts, where the put or call that is sold is more expensive than the put or call that is bought. And so it's a spread, but it's a credit spread. And why is it a credit spread? Because you're receiving a credit when you open the trade. And by by selling an option that is more expensive than the option that you're buying, that's basically what you're striving for, to get a credit. Okay. If you have no sound, you might want to restart again, or look at your sound settings. Every presentation we get 1 or 2 that has that problem, and I apologize. Just to reinforce, we are going to have a replay of this, so you will be getting a replay of the whole presentation. Okay. All right. So here's what the trade looks like. These are 10. These are 10 contracts, so it's -10 because you're selling to open the trade, okay? So you're selling to open the trade. And here, this one in particular, it was 30 October 19, just as an example, 30-10, 30-05 put. So the 30-10 put is the one that you're selling, the 30-05 put is the one that you're buying, and you're collecting 45 cents per contract, right? Since the SPX 100 is based on, since the SPX 500 is based on 100, right? 100 shares per option. So you multiply 45 times 1 contract, or 0.45 times 1 contract times 100 would give you $45. So for every contract, you're going to receive as a credit of $45. Okay? All right. So you're selling the 310 put and buying the 305 put. All right. The trade is considered to be a high probability trade, and I'll share with you why that is in a few minutes. The risk reward on this trade is very, very bad, right? You're risking $5,000 for this particular trade to only make $450,000. So you're giving up you're giving up risk for the reward. Okay, and that's why trade management for this particular type of trade is very, very, very crucial, very important. So the max loss is $5,000 minus the credit that you received, okay, which would be a hefty loss if you went full loss on this particular trade. All right, so let's talk about the time value decay, right? which is one of the main reasons that this trade is a high probability trade. So most of the decay during the life of an option happens in the last 60 days of its life, right? So from 60 days, 68 days to 33 days, the rate of decay is 34%, okay? After that, the rate of decay gets faster as you get closer to expiration. So from 33 days to 5 days, the rate of decay is 57%. And then from 5 days to expiration, the rate of decay is 100%. So when you're trading, let's say 7 DTE, right, and the trade works in your favor as long as the market stays within that range, within the range of the credit. So you don't want it touching or breaching the short strike of that position. So you'll see the decay happen between 2 or 3 days for 7 DTE. And you'll typically be able to close the trade at 50% at least for the credit received within that period of time. Okay, it's an awesome way to leverage the decay on these trades. Okay, so what are the probability factors of making a profit on this trade? Number one is implied volatility. So the higher the volatility when you put on the trade, and the lower the volatility when you take it off, the faster you get your money back, right? Or you get to keep your credit. Okay, so the ideal setup is when volatility is moving lower while in a trade. Placing the trade when volatility is high and then decreases will significantly reduce the initial premium collected. Okay, another probability factor is theta, and that's the rate of decay. It's one of the Greeks for options, and it measures the rate of decline, the value of the option due to the passage of time. This is also a big factor for 70 TTE and monthlies. Also for 0 TTE, and we'll be talking about those specifically as well. Another one is market direction. So if you're trading one position, right, not an iron condor, but a vertical credit spread, and the market goes away from your position, then you're going to have market decay and market direction working in your favor. All right, and that's really the best scenario for any credit spread trader. All right, so let's talk about overall risk management, and this is really important, and I want to make sure that you guys really understand this. Okay, so risk management. You always want to trade with a plan. The plan should include entry exit criteria, trade size and composition, and when not to trade. Okay. Secondly, you want to determine what your max loss is in any type of trade. You want to make sure that you understand that. So then you want to be knowledgeable about anything that you trade. Okay. You don't want to trade any more than 20% of your credit margin used, right, in any particular trade. And the reason for that is because you have to adjust it. Sometimes you have to use more margin, and if you have multiple positions in multiple types of strategies, you don't want to go over 20% of your margin in your account. Okay, and that's just part of risk management. Yes, it includes margin. So if you have a $20,000 account, you don't want to spend more than $4,000 in your credit spread, right? And that would be 4 contracts of 10 wide spread, right? That's $4,000. You don't want to spend more than $4,000 on one single trade. Okay, that's just what I use as a starting point. Okay. Also, you don't want to take more than a 2% loss on your trade in trading capital. So if you have a if you have a $10,000 cost, your loss should your loss should not be greater than $200. Okay, so use that as a rule as well. Some people use 1%, and in larger accounts, you really should use 1%. Okay, for a highly trending market, position trades to follow the trend. Pretty straightforward. There are exceptions to the guideline, but but those require understanding market reversals. Okay, you need to have a little more experience to understand how that would be managed. All right. Never hold a short-term credit spread overnight. Never hold a short-term credit spread overnight, and I'm talking about 1 or 2 days. It's just, I know people trade these, but you just don't have time to adjust those trades, especially when it goes overnight. You know, in a 6 DTE, 5 DTE, you have time to adjust those trades, you know, because you're further away from the expiration, right? But when you get very, very close, the adjustment gets very expensive, all right? And then size your trades to ensure emotions are not part of the decision-making process. The best way psychologically to manage yourself in trading is to trade small, especially at the beginning, okay? Because when it's small, taking a loss is not, it's just not that painful, right? And so you're more apt to say, okay, I'm going to take a loss here because it's just not that much, and move on, right? So when you're trading in larger positions, the tendency is psychologically you don't want to take that loss, and then you end up taking a much bigger loss at the end. Consider short-term and credit spreads 1 or 2 days, all right? 3 days, up to 3 days is acceptable, but when you get down to 1 or 2 days, that's when you don't want to, you don't want to, you want to close that trade. And so a lot of times I actually don't like to use Monday expirations, because I have, because on Friday you're 3 days to the closure of that trade, right? Well, you can't do anything over Saturday and Sunday, and by Monday it's 0 DTE. That's what it is. It's 0 DTE. So there's no time to adjust it, and that's why I try to keep away from Monday expirations for my 7 DTE and monthly trades. All right, I have a pre-market routine, post-market routine. I review areas of support and resistance. Support and resistance is golden to a trader. You can use trend lines, and I'll go through the technicals here. But support and resistance is really the greatest thing that you can learn in trading. Okay. DTE stands for days till expiration. Days to expiration. Okay, I'm going to get some water here. Okay, the US dollar to the SPX is very important because most revenues, a lot of revenue, I think it's 42%, something like that, comes from overseas. And so the lower the dollar, the more favorable pricing the US has. Review 10-year Treasury notes, just because I like to know what is competing with money going into the market. And that's typically bonds, but lately they're so low, there's no competition there. And that's why everybody's trading equities. ES futures, and I use ES futures even in my my day-to-day trading, just because it's a continuous, throughout the week. SPX opens and closes, and there's gaps, and so I primarily use ES futures when trading, because there's very few gaps in it, and it allows you to understand and measure support and resistance trends, etc. Right? Review VIX. VIX is the volatility measurement of the S&P 500. Every stock and ETF and index has an associated VIX-like index to measure it against. And so since I trade mostly SPX, I use the VIX. And then, as I mentioned before, determine credit spreads positions, and I save them in my application to make sure that I'm ready to trade those right when the market opens. All right, post-market routine, determine if rules were broken and why. Very important, determine if risk was within acceptable levels, especially for wins. So if you go over your risk standards and you still make a win, it creates complacency, okay? So you got to be really careful with that. And making a lot of wins, and I'm sure you've experienced this, you make a lot of wins, in a row, and then you get kind of cocky and you say, man, I can do this, and you add more positions and you get it bigger, and that's when you take the loss, okay? So you got to always check yourself and make sure you're trading within your trade plan. Always review your trade plan, and I'm doing this constantly to make sure that it's still applicable to the market that you're trading or the environment that you're trading in, okay? and then trade your trade journal with your findings. Keep a trade journal. It's important, especially when you're testing trades, that you want to make sure that that you're doing the things that you're supposed to be doing, and it's kind of a conversation with yourself. All right, really important. Alrighty, so let's get into the main strategies here. Okay, so the first one we're going to talk about is zero DTE. And before I get into zero DTE, let's talk about pattern day trader. Okay, so if you have an account that is less than $25,000 usable, all right, you're subject to pattern day trader restrictions. And what are they? Okay, it is the buying and selling, or selling and buying of the same security on the same day, and initiate same day, and initiates day trades for 4 or more times in a 5 consecutive business day period. So you only have 3 to use in a 5-day period. If you go over, yes, in a margin account. If you go over the 3-day day trades in a 5-day period, you can be subject to penalties, and those penalties consist of the broker restricting your account to only selling positions, right, for 3 months. That's the most drastic penalty that you can have. A lot of times brokers will give you chances if you break that rule for a couple times. It depends on your broker, and you don't want to get in that position. All right, and I'll show you some alternatives for what can be done. All right, so to avoid being flagged. Okay, good. Okay, thanks, Simon. In order to be, if you know, to avoid being flagged in a PDT account, you want to limit your trades. This is one way of doing it. Okay, limit trades to 1 trade 3 days a week. So if you trade 0 DTE, trade Monday, Wednesday, or Friday. All right. And so I'm back to my rule of closing all my 0 DTE trades. That's just what I do. And I've tried different ways, you know, and it just works every time. Okay, to do it this way. And so so limit your trades to 1 trade 3 days a week. Or what you can do is you can manage trades for multiple accounts. So you can have multiple accounts that you're trading from, and you alternate each day, right? Or you can trade iron condors and allow them to expire. I don't recommend that, but a lot of traders do that. That way you can avoid it as well. And then you can also trade futures, use spreads on futures, which are not subject to PDT restrictions. Why is that? I have no idea, because it's pretty much the same thing. Only it costs more to use spreads on futures. But there's no PDT rule. You can do as many trades as you want in any given day. All right. So let's talk about trade management here, right? So I enter my trades within 5 to 10 minutes of the market open, right? Using a 5-wide to a 15-wide spread. That's pretty much the optimal. For me, I use a 10-wide, all right? Now, when I'm using the 5-wide spreads, you know, you should have a better understanding of where the market's going. Very difficult to do, but 5-wide spreads, you're going to be closer to the market, okay? With 15-wide spreads, you can add additional distance from the market, you know, and it does allow better use of iron condors. Now, the delta would vary on each of these. I don't use delta, I actually use price. So with any one of these trades, I usually enter my trades between 40 cents to about 60 cents, okay? And really, most of the time it's 45 or 50 cents, right? So for a 5-wide or a 15-wide, I would use the same amount. Now, if you use the same price, you're going to be with the wider the spread, the further away from the market you're going to be. Okay, and that's really what your goal should be. Is you want to be as far away from the market as possible, so that your position will not get breached, right? Premium, I said, should be between 35 and 70. I really make it between 40 to 60. That's really optimally what I use. Take profit, 20 cents for range bound. And it's just because you're going to have to wait longer if it's in a range bound market. And then 10 cents for a trending market. The reason I don't use that I don't use 5 cents is because literally you will wait. Let's say I close a position. The terms, okay, so range bound. Okay, trending market is a market going in one direction. A range bound market is when it's just vacillating between an area of support and resistance, and it's just not going anywhere. It's just a lot of choppiness. All right. So so generally, when there's a range bound market, it's going to take longer for the premium to decay. Excuse me. And for a trending market, 10 cents because you can close that trade pretty quickly in a trending market as long as the trend is moving away from you. All right, away from your position. 5 cents, you'll literally wait about 3 hours to get an additional 5 cents to close that trade. Okay, and I'm very experienced at this, and I can tell you this, and I've watched this thing over and over and over again, where it's just not worth the wait because anything can happen in a market, and we'll go over that in a few minutes. Expiration for a 15 wide spread, and I know a lot of traders that use 15 wide or even wider, and they do wait for expiration. I'm sorry, getting my I had a little cold here and trying to get through this here. Okay. All right, here we go. And then stop loss, market immediately moves against you and trade continues after trade initiation. So a lot of times the market will immediately move against you. And you want to wait those out a little bit, okay? Unless you see a very directional trade and it's just hell-bent on moving in that direction, okay? So you want to, if that happens, you just want to close that trade, and take as small a loss as possible. And again, I use support and resistance areas to understand where those areas are. All right, and I'm going to give you examples here of these trades. I enter within the first 5 or 10 minutes, and the reason I do that is because, excuse me, I take advantage of the implied volatility, and it's highest typically at the beginning of the opening of the market. Okay, so now let's go through this particular trade. All right, so I put in, I sold right at 9:30, and this is a long time ago, but I do this all the time here. 29.95, 3,000 call spread for 40 cents. And so I want the market to go down, right? In this case. So what happened? Well, the market did go down, but then it moved up. Now, if you can see here, I had identified this area as resistance, and it was the 29.95 area here. And it was, and I identified it based on the overnight trading in futures, right? And this is a graph of futures, a chart of futures, not of the SPX, but it mimics the SPX. And so you can see here that there was support here, 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 but then it finally broke here, right? So I didn't know what was going to happen at the end of the day, right? I knew what was going to, I only knew what was in front of me, right? So right here, I knew this was resistance, and I was ready to close the trade here if it broke that area. So what happened? The actual market went way down, and I had an order to close it at 10 cents, and I got that in, right? But look what happened after. I'm sorry. What happened after was that the market completely reversed and trended way high. So if I'm sitting here waiting for this thing to expire, I would have been sweating bullets, right, at this point here, and probably would have taken a bigger loss on it. And so that's why I close these trades. So what does that mean? It means is time is risk. So the more time you're in the market, the higher the risk that you're going to take. Some people do take stop losses on there, and I do take stop loss. I don't put on stop losses because with with spreads, they're just not reliable. You don't get the exact price that you're trying to get out on. So I use limit orders and have mental stops for these trades. You have to be more disciplined, but if you do this over and over again, it's not a problem. Okay, here's the same same graph in. Actually, this is a different trade here. Okay, that I'm going to go over. All right. So this one here, I put in a 28.85, 28.90 call, and you can see here that the market did move against me, but this is a 1 minute chart, so it looks a little bit more drastic. So it did move against me, but what I was also using is the RSI. RSI is a relative strength indicator. And in this case, what happened was that there was divergence, which means that the market is trending higher as the RSI indicator was moving lower. So there's divergence here, okay? Let me go back. And so I had confidence that as long as we didn't breach this area up here, that it would eventually come down. So we had a lower low, a lower high, a lower high, a lower high, and I came out okay on this trade. Same trade. And I wanted to show you volatility and how it, man, it's bad. And how volatility increases at the beginning of the day. And then it lowers, it goes lower throughout the day until we had a deeper dive here at the end of the day. But there's no premium at the end of the day. You have the premium here, and as long as it's, and this is a very, very typical diagram for what happens throughout the day, that volatility goes down throughout the day. And this even happens as sometimes as the market's going down. Yeah, it's pretty much the same as the VIX. Okay, really apologize for the coughing. All right, and you can see here that the high was 28.79, where I had a 28.85.90, and that was a high of the day before, and there was resistance there in this area here. Okay, alrighty. All right. And just showing you the lower highs as it went through. Alrighty. Let's talk about 7 DTE. 7 DTE, I enter with small positions in multiple expirations. So let me explain that. And this is a change in my trade plan that I made this year, because I took a big loss with having more positions within the same expiration. And so what I did was, so let's say on Monday, right? On Monday, I'll put in a 7 DTE trade, and and my maximum number of positions, let's say, is 12, which it is for 7 DTE. Okay, 12 contracts. So what I'll do is I'll put in 4 on Monday to expire the following Monday. Okay, I don't like expiration on Monday, but I'm just sharing this so you can get the picture here. Then on Wednesday, right, I'll put in another 4 with the right conditions to expire on the following Wednesday. And then on Friday, I'll put another 4 to expire on the following Friday. So these are smaller positions. Instead of using 12 contracts on a Monday, I spread them out. And what that does is it spreads the risk, because now you can manage each of these expirations separately, okay, and adjust them separately. And things happen in the market at different times. And so it really completely and totally reduces a significant risk in trading these. All right. And by the way, I try to do these when we have increase in volatility. So when we get a little spike in the VIX, I look for those, and then that's when I put them on. For delta, I use 10 to 12 delta for bull spreads and 7 to 10 delta for bear spreads. Very seldom do I put on bear spreads, especially in this kind of market. Just because, number one, you get more distance on bull spreads than you do for bear spreads. Number two, the premium prices are not as good as they are on put spreads. And so, and number three is that the market generally is moving up, not down. You know, we do have spikes going down, but generally the market is moving in a upward direction. All right. And so you want to take advantage of the trend. And that's just the way it goes. Okay. An acceptable profit is 58 to 80% of credit received. I usually take 80%. And for positions, rolls, or adjusted, you want to lower that profit target, because generally when you roll a position, it's not, you're not rolling it into a favorable delta, because you want to take a credit on that rolled position. But I'll actually usually pay for that to that roll and take a smaller credit at the end. All right, just to keep the risk down. In times of lower volatility, and this is when I wrote this, when volatility is around 15 or lower, use 20 points if the position is threatened on the short strike. When we're in over 20, where we are right now, I will usually roll when we're within 50 points of the threatened strike. Okay. Stop loss. I don't take stop losses. Very, very rarely do I take a stop loss, except in a credit spread, in a call credit spread, where I will take a stop loss on a on a position, because I don't like rolling higher into a market, because when you're rolling higher, typically the market's going higher, volatility is going down, so you're getting less premium. So it's a slow death, until you finally close that trade for a large loss. And I've experienced this myself, and I just don't do it anymore. All right, I'm going to go through a real trade that I went through. Okay, and this is using both sides. So the initial trade was a put spread, 29.45, 29.40. Sold it to open, collected 45 cents. And then I added a call credit spread, 30.35, 30.40, collected 40 cents on it. All right. So the very next day I had to adjust it, because it breached my 20 point rule. So what I did was I adjusted the call credit spread, and I paid 35 cents for that roll. And you see the numbers there. For the put credit spread, I collected 30 cents for that roll. It's getting really bad here, guys. Sorry. I'm going to talk a little bit lower. Okay, in the end, everything stayed the same within a range, and I eventually collected. I closed the trade out for 20 cents. So let's go over it. Hot water with honey and pepper. Thanks. Okay. Collected 85 cents at the beginning and closed out the trade I rolled it. It cost me 5 cents between the two positions. And then I collected a 60-cent profit at the end. Okay. Now I'm gonna go through this, and this is a hyper display of my actual trades this April that I made. All right. And this is a little bit confusing, but it brings home the point on how great these trades are. Okay. I'm going to pause a second because I need to get more water. I'm sorry. I'll be right back. All right, I'm back. Okay. So let's talk about the first trade. I put on the first trade, put spread, collected 50 cents. Second trade. The market moved up in my favor, so I was able to close that trade 3 days later for 5 cents. And then I put on another put credit spread for 50 cents. Okay, so closed out the first trade. Then I put on this trade. Then I put on another. I put a call spread, okay, for 55 cents. And then I closed this trade for 5 cents, right? And then I put on another trade for 50 cents, a put spread, and closed out this trade a few days later for 15 cents. These are actual trades that I made, okay? Now, what am I doing? Some I wait for 5 cents, some I close at 15, some I close at 20, depends, all right? So now I got in trouble on that one trade, so I did a roll, and it cost me 15 cents, right? At the same time, I put on a put spread for 55 cents. Now, what happened? Did I close? Sold it open, sold it. About to close. Yeah, I closed this trade here finally, right? I closed it for 5 cents. And I did another roll here, cost me 35 cents. And I also put on a put spread for 50 cents. And then I put on another put spread for 65 cents the next day. Closed 2 positions the following day. That one. And you see the numbers adding up here at the bottom, right? And that one. I closed those 2 positions on this day here. And then I closed this position on this day and opened a new position for 50 cents. And I think that covers it. Okay? For a total gain of that month for $255. And I can tell you that I closed this position out for a nice gain as well. Now, again, I used, this was, excuse me. This is when I was really testing this strategy again based on my multiple expiration trades. Okay. And But now I mostly put on put credit spreads for 7 DTE because it's just very, very consistent. I hardly ever have to roll those, and it's just a much stress-free way to trade. But you can do it the way that I did it here, as long as you're proficient in rolling and understand what you're doing. Okay. Monthly trade. This is the trade that I actually started with in my trading career. And it made me a lot of money. And I was working at the time, full time. Okay. This is a 30 to 60 day expiration. So it's almost like you set it and forget it. Okay. It's very little management on it. So entry again is when you have higher volatility. Bear spreads, you always want to enter those cautiously, and you want to use a hedge on these. And I don't get into the details of the hedge here, but I put on hedges on my call credit spreads, and I have one on today. Because I have a 38.10, 38.20 call spread for that expires in December. And so I use a 10 to 12 delta for bull spreads, 7 to 10 delta for bear spreads. All right. Take profit. Same thing as 7 DTE. No different. This is managed exactly the same way as 7 DTE. But these are AM expirations. And if you understand AM expirations, there's a gap during the night between Thursday, the third Thursday of every day, every month, and Friday where the options settle. Okay. You have no control during those periods of times. And I made a deadly mistake of thinking that they were going to expire. And I lost a lot of money, and never did that again. And so you always want to close out your AM expirations before they expire, or as long as you're at least 10% away from the market. And these could get 10% away from the market very easily. All right. Initiate a roll, and this is with low volatility, 2.5% to 1.5%. I use 5% when we're in higher expiration periods. I'm sorry, volatility periods. Why do I use AM expirations? Because weekly expirations have very little liquidity when they're very far from the market. And with monthlies, you can get very, very far from the market and may need to close it, and you may end up not being able to close it. And I did test this with weeklies. Okay. I couldn't close a weekly, and it was a small position. I couldn't close it. There was just no liquidity, no buyers. All right. And this happens with NDX indexes as well. There's not a lot of liquidity other than SPX. Okay, let's move on here. No stop losses on these. So I'm going to walk you through a trade, and we're getting to the end here. So I'll walk through here. Okay, so this is what happened. I put on this trade here. All right. I'm not going to. You have a larger distance on the put side than the call side, and this is what happened. The market went way down against me, and so what did I do? Here's the adjustment for the monthly. I bought it to close, right? In this particular case, because I knew I was going to adjust it into the other month. And so if you roll it, what happens is you're using double margin, and that could jeopardize, if you don't have enough money in your account, you may not be able to roll it. So what I do is I close it, close out the non-threatened position, and then I roll the threatened position. Okay, in this case, it cost me 90 cents, but I sold it for 90 cents, so it was a debit of 0. Here's a specific trade. I sell, then I sell the call side for 50 cents. Okay, and I actually made a credit of 45 cents. So adjustment credit was 45 minus commissions. premium collected at expiration 115. So it was larger than the original credit that I received for that trade. Okay, doesn't happen all the time, but it happens. So here's the ending position of that trade, and it expired. I was able to close it 10 cents, 5 cents on that trade. All right, let's talk about technicals real quick. I'm going to run through this. Okay, this is a fib extension that I use, and you can see here how the market really moves within these areas, all right, and creates support and resistance. I usually don't take out a position until it breaches and closes above a support or resistance level. I just wait till that happens, and that way it keeps me out of taking stop losses too early. Okay, this is again divergence here. Where the market's going up, and this is in MACD, okay, it's similar to RSI, and showing that the market's losing momentum as it goes up. Just a quick review on support and resistance on trend lines. Just go through this real quick. Here's a trend line, another trend line here, and here's support and resistance here, all right? So the market went through, this trend, broke through here. Now this support became resistance here, all right? And then and then you also have a breach on this trend line where resistance became support on the trend line, and I see this over and over again in my charts, and this happens all the time, where it's a good position here to get in, if you want to, if you're trading futures, right? Okay, all right. It's just a quick review on these technicals. Let's talk about futures real quick. All right, I trade S&P, MES, and these are micro futures, so you can get in really, really low cost and not a lot of margin that's required if you want to start trading futures. And just a quick few terms, right? Initial balance is this in this time frame. This is a 1 minute. Initial balance means the high and the low within the first hour of trading. Okay, and it creates a level of support and resistance dynamically. Aside from the fib extensions, right? You can use the IB trade. Basically, you can see here where it broke out, but you don't want to take your first nab at it, because you can see here that it just kind of worked its way, and this was a false breakout basically. So you want to wait till this happens. Okay, this goes down and this comes back up, and that's where you want to put your position on. But in this case, this was basically a false breakout, and you can use this to actually short the position down to the IB low, right? Another example, this is finding the bottom, okay, in futures. So here, let's go through this, right? We have a bottom here. We don't know if that's the real bottom. So what happens? We test it. You always want to wait for a test. It failed. Then here we established another bottom. Tested here. What happened? It failed. Okay. So here's another bottom. Now we get to this point here. We tested, and in this case, in this case we have a bottom, but it didn't come back down. It went down a little bit, but it kept going up. All right, and here it did go down here, and it actually tested it now, but there was a reversal, and that's where you want to get into this trade at that point. All right. It just so happened that it happened on the IB low, and and that's where it occurred. So let me give you another example of divergence here. You can see here you had a market going down and momentum getting weaker, going down, and so that's just an indication of possibly a reversal in the market, but you have to get it confirmed with a move higher in this case. Okay. Okay, and here's the same on the 5-minute. And so you can see here, and this is where the reversal actually occurred. You had higher lows, okay, until you and higher highs until it finally started getting a lower high, and that's where you would probably get out of this position, right? Once you got into a lower high. So just quick scenarios on on this. Here's a fib retracement. Same chart on the fib retracement. So let's go back here real quick. Usually when markets go up, they go up no more than the 786 unless you're going to have a real reversal. But what happened here, it went up to the 786 area and then it started going down again. Okay, but you still had a higher low here and probably a good tradable position right there in that point. Same chart on the 1 minute. Okay, just to give you that example. Right. One more thing is a fib extension. I use these a lot. This is the ABC way of trading. A, point B, point C. This is a little shallow, should be a little bit lower. But once you get to the 618 here, that really triggers, and it'll typically go up to the 100 level or the 125 level. So the A to B is the same level as C to D. Okay. And I use this in my futures trading all the time. All right. So the question is, are you ready, right, to follow my trades while you learn the 4 strategies that I've outlined here, okay, and be consistently profitable? So I created, and I wanted to share with you, I created a trade alert system that uses all these strategies together, along with a couple other ones that that another trader that I work with does as well. Right now, let's go back to 1, 2, or 3. Right, interested in learning new strategies? Maybe you're not seeing your account grow. You haven't found the right strategy that works. I have a way for a low cost, and I'm going to talk about it a little bit. So stick with me here, okay? That you'll learn these strategies while you earn money. All right. Now, how do you break the barriers? Well, if you keep doing what you're doing and hope that one day it'll stick, it's not going to stick. Okay. Or what you want to do is you want to finally take the steps that places you where you want to, where you want to be, and that works. All right. Success is learning, training, instruction, practice, right, to get to success. But there's additional steps here, right? Discipline. And we all know this: commitment, having an edge, and a no-quit attitude, right? So that's what will get you to be very successful, in trading these. So what are SOS trade alerts? They're instant trade notifications sent directly to your phone or computer that announce high probability options and futures trades. If you want to generate consistent income and dependable returns, they come directly from my account. All right. Whether you're just getting started or already successful and ready to expand, right? Our alerts will help you trade at your highest levels, and it's designed to transform your trading from uncertain to predictable and teach you how to generate those returns consistently. We have 2 chat groups. The live trade chat group, where I mostly talk about the trades and answer any questions that people have, and then we have subscriber trade groups that people will share their own. The subscribers will actually share their own trades in the group, and it just creates a great synergy with these multiple trades that we're doing. Now, it's pretty lively, and in addition to the live chat groups, we have channels. Now, this is one-way conversation. I'm actually having a now I have a quick review of an orientation of our trade alerts to make sure that once, if you do decide to join us, you get in there and you're ready to go. So I give you a full review of these channels specifically, and how the alerts are managed and sent, so that you have a good understanding of what's going on, right? So we have different channels for trade alerts. And again, these are one-way conversations. going out, so there's no noise in here, and you get the trade alerts exactly that come from my accounts. Okay. Let's talk about a few success stories. Matt trades monthly trades. I worked with him for a long time and loves the strategy. He works full time, and it's perfect for him. Winford was with us for a while. He was very, very good at 0 DTE and loved the strategy. Went off, learned it, was with us for several months, and then went on his own and very successful. Paige is a teacher. She loves the alerts as well, and was with us for a while. And Dwight is a CIO for a company. He said, I love, I've been trading on and off for 25 years. 0 DTEs, most consistent income earner, highest probability that I've ever implemented. Really, really was fond of it. Okay. So not only that, but if you try us, okay, my guarantee is that you'll make money in the first month, or else I will return that money to you, the subscription fee plus 25%. Okay. And this is not a gimmick. This is for real, right? I've been doing this for 2 years in this trade alert service that we put together, and I've never had to refund it to anyone. They never asked for a refund. Okay, so the high probability is not a gimmick. It's true. Now the other part of this again is you have to manage your trades, because you can get into big trouble with credit spreads. But we'll walk you through that process. Okay. So in addition to the other channels, we have a training channel where we put ad hoc training in there, charts and show you how to use them, so that again, we don't want to make robots out of you guys. We want you to learn how these strategies work, and so that you can apply them yourself and make your trade plan your own, right? So you're probably asking, well, what's the price? Okay. The price is $59, $99, and $129 for our 3 different types of services. Okay. The first one is monthly, and you get Ike's trades. Ike is another trader that works with me, and he puts out calendar spreads and all kinds of spreads that he is very proficient in and always makes money in those trades. Okay. But this is not the real price. So I'm going to give you guys the the trade alerts that are specifically for our waitlisters. Okay. And so the price isn't $59.99, $129. It's really $79, $39, $79, $109. Now you should see an offer that's up, and just want to make sure. Let me see. Yeah, let's put the offer up here. Okay. All right. So you should be able to see the offer now on the alerts, and it gives you the link for joining, right? So this reduction in cost is for life. So we give you $20 off for life as long as you sign up in the next 3 hours. Okay. And I say this is because, I don't want you to hang around and think about this thing. If you're going to make a decision, make a decision. I'm going to put it out there for 3 hours. After 3 hours, it's going to go revert back to the original price. And, so you have plenty of time to think about this and try it. And what's $100 in 1 month that can change your trading career forever? And I'm telling you, I've seen hundreds of people come through our program, and it's changed their life in trading. Okay. So again, this is not a get rich quick scheme or anything of the sort. All right. It's a way that you can learn while you earn and become a successful trader that you've been wanting to be for a very long time. It took me a long time, guys, for me to get here. Okay. And I wanted to put this together, put this program together, trading these types of trades so that you can be successful too, right? And so you don't have to go through the years and years of book reading and figuring it out and testing. So what I gave you today was basically a proven trade plan, that works for me over and over again. Okay. So what do you get? If you want to learn the step-by-step process to gain income in a market that goes up and down, you want to finally break those losers, and you want to earn consistently. Okay. This is a winning strategy. It's a winning strategy. You have access to $20 off for life, for joining not only the wait list, right? If you're in the wait list, but we're giving you the same deal that the waitlisters get. All right. You get professional traders chat group and subscriber chat groups, right? And Ike and I basically are full-time traders. Okay. We don't just provide the signals. We actually trade what we're trading, what we're sharing. Training education channel that's filled with great content, automated signals that come in within seconds of the trade. They come directly from my account. Okay. And Ike it doesn't come from his account, but he's very, very quick in putting these out as well. You get trade entry, full price, price target after fill, and my guarantee that you will make money. It's just a winning conversation, a winning program. Okay. And again, my guarantee, if you lose money the first month you're in, I'll give you my subscription price back plus $25. Okay. So now, questions. I promised you that I would answer any questions that you have. What is a spec alert? It's basically just options on different stocks that are not part of the strategy. So those are spec trades that we have. Okay. My track record is I share that in my track record. I share that in an email that I send out every Monday, Wednesday, Friday. It's also in the trade alert service. Okay. Okay. Any other questions? And I can I can share that. I can share that with you. And how to sign up for the newsletter, and everything is in there. My track record's in there. This will be recorded, and you should receive a replay. I think either today or tomorrow. Okay. The advance notice is I try to tell you what I'm going to be trading, and then when I actually fill the trade. When I actually fill the trade, and Marianne, thanks. I know you put in your 7 DTE trade and you made money on there. I recommend using Thinkorswim, but Tasty Works. I hear good things about it as well. But for me, it's just I've been using Thinkorswim with TD Ameritrade for a long time, and it works for me really well. I do not roll 0 DTE trades anymore. I do not do that. But I do roll 7 DTE and monthly trades. Yeah, sorry about the commissions there, Leslie. Any other questions? So we'll have this open until 4:30. Yeah, till about 4:30 today. With that price, with those prices, okay. And then after that, it's going to revert back to the original prices. If you're trying to join now, let me know if you're having problems. I can walk you through that. Yes, the $20 reduction is good until 4:30 today. Exactly. I do take a loss when the 0 DTE goes against me. Absolutely. I tried rolling that, just to test it again to see if it worked, and it did not work. It just didn't work. I took a greater loss than just having to take the loss on the position, because usually when when a trade gets breached, right, the market is going in one direction, and it'll get breached, and then you try to roll that position, and you're rolling it on the day of expiration, which you get lousy returns on, and then you roll it out 7 days, and the market continues going in that direction, and it's just it's just very painful. So better to just to take the loss. Any other questions? I do try to exit, and sometimes, like, you know, I'll hold on a position, right, and then the market starts going against me, and then I'll say forget it, I'll just get out, and usually I'll even make a profit on those as well, you know, instead of waiting for it to continue to breach. If you have questions about entering the trade alert service, just let me know. I'll help you. I'll guide you through it. I know we provide instructions on you know, on getting you there. We're also going to have an orientation. You can get in on that as well. It's going to be in the email that you receive today. So if you want to join the orientation, I'm going to go thoroughly through the trade alert service itself with real screens, live screens, and share with you how to use those screens, how best to use them, how to position your alerts, whether they should sound or you know, or just kind of highlight you know, the you know, the screens, etc. And different way to highlight the screens. Telegram works on multiple platforms, on every platform. So basically, I use it from my phone to my work computer, to my laptop, to my iPad. You know, they come very, very quickly. I mean, very quickly through Telegram. Any other questions? The orientation is going to be at 8 p.m. tonight, but I have a couple more that I have scheduled as well that I'll be doing this week and next. You know, I want to make sure everyone really understands, because there's a lot of activity in the trade alert service, and I want to make sure that you get clear information. Thanks, Marianne. Clear information when you get in there, and it's not confusing to you. Okay, so this is actually the first time that we created an orientation to get you acclimated very, very quickly. For non-U.S. residents, I think IB, international brokers, are the ones that I've talked to different traders that they use, and they say they say that works really well. Hey Nathan, yeah. So again, we'll have that orientation, and so everything is you know, is understandable in there, and you'll have a chance to ask questions from me directly. I think TradeStation is usable. I don't use it, but I know other traders that do. You just have to connect to the right broker with TradeStation. Any other questions? Sure. Let me post those up. There they are. Minimum capital, I'd say, is about $3,000 to trade one contract. I wouldn't go less than that. No, I hardly ever roll my trades, and the reason is because I mostly put on bull spreads, okay, which are very far from the market, and I do it with higher volatility, and it works really well. The example I showed you in April was me testing this thing, you know, to make sure it was going to work in all kinds of conditions. I had a lot of volatility in April, as you know, and I put on call spreads and bull spread, and call spreads and put spreads, and they all worked. They just all worked. And what I shared with you is not something made up. That I actually, traded those positions. I only trade SPX, and it's because the liquidity is there and it's not in the other indexes. Is it declining your credit card? Or is it not accepting it? Let me see if I can find out what's wrong there. Let's see. Yeah, I'm not getting any messages for signups, so I don't see any problem. Okay, gotcha. Spec trades are in the, let's see. Oh, they're in the highest plan, actually. It's in the 109 plan. Okay, Leslie, thanks a lot. Appreciate that. Yeah, I didn't think it was going to get so bad. Sorry about the coughing, guys. Spec trades are basically option trades on different stocks and ETFs. Sure, no problem, Tom. Tom, are you the futures trader that I interacted with in email? Or is it a different? Oh, sorry. Okay, different Tom. I hope to see you there too. All right. Any other questions, guys? I'm hanging around here till 1:30. Okay. Thank you, Sonia. Appreciate it. Appreciate your time. Hope you found this of value. Even if you're not joining, hopefully you can use the information. I just want to make sure that you guys are good and have something to shoot for here. The alert is credit spread SPX. Yes, yeah. We have alerts in futures. We have alerts in other types of spreads, but yeah, but all the spreads have trade alerts. Okay, okay, Nathan, you'll get an email for the orientation tonight at 8 o'clock. I'll make sure you get that. Yeah, and I see that you got it. Hi, Cynthia. The course on the website is the same. It goes a lot more in depth. The course does. It goes into psychology and a lot of different patterns of technical analysis. And I have a lot more examples of 0 DTE and 7 DTE. Okay. Oh, where's the sign up link is in the offer section. So you should be able to go to the offer section and see it there. Hold on one second. Okay, back. Okay, any other questions? I do have, we do provide sessions, Tuesday sessions, and we have ad hoc sessions in the trade room. Yes, I definitely suggest using one contract if you're beginning. No question about it. Max risk for let's say a 5 wide credit spread is $500. For a 10 wide is $1,000. Yep, the link. Let's see here. There's a link. You're welcome. Again, this will be open until we'll have this price here until 4:30. Sometimes I do leg into trades, Tom. Yep, absolutely. With 70 DTE, what makes you open a new trade? Yeah, if I don't have my max positions in, I'll wait for a IV spike. Exactly. Yep. That's when I put them in. Do you leg into spreads? That's for futures. Which one is for futures? Oh, the one, it's not, the instruction page. You need the instruction page? Oh, subscribe page. Yeah, if you click on it, you have to download Telegram, and then you'll get you get instructions on how to subscribe. You have to subscribe in Telegram, not on the website. 500 or 5,000. Let me see, Nathan. Let's see. Oh, for it depends. For futures trades, it really depends on the broker that you use. If you use Thinkorswim, they put on the max margin requirement. If you use a Tradeovate, let's say, which is a great broker for futures, you only have to put on $100 or $200, for margin. Yeah, if you have Telegram already, then there's in the instructions there's a link that you use to get to the SOS Live channel, and from there is where you subscribe. It's the SOS Live channel. So let me see if I can. I might be able to put it up here. Hold on 1 second. So let's go to here. Okay, so let me share. Let me stop sharing. Okay, I'm going to share Telegram here. So you'll want to go to the SOS Live channel right here, and then from here you type in plans, and it'll show you the different plans that are available here. Hey, Errol, the stops that I use for 0 DTE is based on support and resistance. So it's a little harder to describe for 0 DTE. But I'll be covering that. I'll be covering that more in the in the trade alerts in there, and how I select the support and resistance areas. Toss margin, toss margin for spreads. I'm pretty sure it's the same margin requirement. For futures, it's different. But for spreads, the margin requirements are the same for Tasty Trade and Thinkorswim. And Nathan, if you have more questions, direct message me too in Telegram, and I'll help you out. Right? If you need additional assistance, and I'll go through the margins and all that stuff. Okay, so Brian, you once you downloaded Telegram, there should be a link in the instructions. You should see a link in the instructions on how to get into the SOS Live channel. So there should be one that says, I'm typing it here, SOS Live Trade Bot. Okay. Yep, absolutely. I'll help you out, Nathan. No problem. And then once you hit that, it'll take you right down to the SOS Live channel, and from there is when you enter your subscription. Okay. And then also you can type status here, and then you'll get this to join the channels. It's all in the instruction page that you should have received. Yes, TradeStation, you can use it. You just have to be connected to the right broker. And for those of you who are still here, you can see here that there's a lot going on here. Okay. Even today when we're not trading spreads. So a lot of great information. This is the live, the live trade alerts here. Okay. You can't join. Hey, sorry, Vincent. You can't join. You got to join through Telegram. I'm sorry. It's the only way. It's the only way to get there. Once you get past that, I know it's a little cumbersome. Once you get past that, it works. It works really, really well. Yeah, the minimum premium, it's usually 40 cents, JI, that I use for 0 DTE. Kajabi, I use it for the mail list that I have, and for the newsletter I send out, and just all kinds of stuff. Oh, 0 DTE for 0 DTE for 7 DTE. Yeah, 7 DTE. I use a 10 delta on it. So I use the delta. Usually Usually I'll get like 70 cents, 65, 70 cents for 70 TE. Yeah. Sometimes I'll go even up to 80 or 90 cents on 70 TE, depending on how confident I am. The minimum premium is 50 cents is what I've used for 70 TE. Okay, Nathan, I'll see you in the trade room. Okay, thank you. Alrighty, I think we're we're done here. Thanks, thanks for everything, and hope this is of value. And hope to see you in the trade room soon. All right, reach out to me if you have any other questions. All right, thanks, guys.